Good morning, Paul Georgie from Allendale. It's December 7th and Friday morning. We've got markets mixed here this morning in the grains, corn weaker, beans a little bit stronger as we speak. The main focus, I think, in the last few days here and probably going forward here into the end of the year will be the demand side of the equation. Corn yesterday on the weekly USDA report showed that we only sold 47,000 tons of corn last week, and we had very good export sales in soybeans. However, over a million metric metric tons in the soybean complex. So corn price is definitely a deterrent in world buying overnight. Taiwan bought a cargo of Argentina corn at $25 a ton under U.S. Gulf corn. So definitely an issue. The factors affecting that is certainly flat price here at the Chicago Board of Trade, plus the increase in barge freight and increase in cost of getting ships down to barges down to the Gulf and moving grain to the Gulf is costing a lot more. Yesterday, Coast Guard changed the tow recommendations, reduced the size of tow that barge operators can move at one time down the Mississippi, and that's south of Cairo. So it's still a major problem with water levels there and having an impact on demand for U.S. products. China has been the big buyer in soybeans. It feels and talk here this morning that China has bought more beans this week, up as much as 10 cargoes. Their crush margins are now supposedly the best they've been for the year. The amount of soybeans in their ports waiting to be unloaded is a low amount, so that has driven them to buy more soybeans and has certainly supported our soybean exports and soybean demand. Domestically, how it's affecting price, the Gulf basis yesterday was up 4 cents on soybeans. The Central Illinois basis was up 10 cents, and we had Western Iowa bean basis for the week up about 12 cents. So strong basis here in the Midwest, and partially because of demand. The other part is because of farmer selling. Just a lack of it is what's driving prices up. Now we're in a time period here around this 7th to the 10th of December that historically provides some of the strongest basis for the early marketing year. We'll have to watch that very closely as we expect that soon we should see producers start moving grain to the elevators to the market here that they can deliver after the first of the year. So watch that closely. That could keep a lid on basis once we get past this 10th time frame. Other news, we've got supply-demand report out on Tuesday. Trade's expecting a bit of an increase on corn ending stocks, a little bit of a reduction in soybean ending stocks, so and wheat ending stocks up slightly. So not a big change there. Normally the USDA does not adjust supply-demand tables very much during this December report. The big report will come in January when they'll make usually some sizable adjustments. So we've got that ahead of us next week. We've got NOPA crush next week on later in the week. And weather in South America looks like it's going to be drying out now in Argentina. The Buenos Aires Cereal Exchange did announce that soybean and corn plantings are over 50% done in Argentina, with a period of dry weather ahead of us for the next 10 days or so. So that should allow for some additional planting progress. They're still behind about anywhere from 13 to 14% of a year ago. In the livestock trade, Packers bought a few cattle early at 122 for some heavy cattle here this week, and now they're at a standoff. Packers bidding 123, feedlots offering 126 to 128. Last week we traded at 125. We still have Packer margins deep in the red. We've added 40,000 cattle to the show list this week, and the cutout values this week have certainly not got the Packers excited about paying higher money, as cutout values worked lower most of the week. So expect some trade here at near steady to maybe 50 cents lower. We'll see where the who gives in first on the price of cattle here this week. In the pork market, we've got cutout values down slightly there yesterday. The big concern there is the technical picture that we're looking at on the charts. We've had a lot of fun selling yesterday. That could continue. We're lower here this morning. If we close below yesterday, we get another weak close today. That will take out many of the uptrending channels that we've seen on the hog charts, and could lead to more selling pressure toward the end of the day as we go into the weekend. So stay in touch with Allendale's research. We'll keep you informed. You can call our office and talk to the brokers at any time. You can reach us at 800-262-7538. We wish everybody a very successful trading day, safe weekend, and I'll talk to you on Monday morning. Thank you.